Bismillahir Rahmanir Rahim. We continue with the next session of today's discussion on Islamic Finance 101. And this session will be divided into two segments. One will be in terms of a discussion on contemporary topics related to Islamic finance, banking and economics. And the last segment of today's session will be in terms of a practical Q&A, question and answer session, and a live discussion around the topics related to Islamic finance. So we move over to the next topic of discussion, which is an introduction to Islamic Fintech. The proposition of financial services backed by technology or digital platforms in new and innovative ways. Combination of fintech technologies with the underlying Islamic principles of finance and economics. So Islamic Fintech is basically fintech that is Islamic and Sharia compliant. And there remains a huge gap and a huge opportunity in terms of Islamic finance developing and innovating to become, to respond and adapt to the new age in terms of digital banking and financial technology software solutions. There are 7 key areas of Islamic Fintech. The first is in terms of InsurTech or TakaTech, insurance technology, blockchain, investments and wealth management, microfinance, charity, which is referred to as social finance, and payments or payments technology. So these are the main elements of a fintech architectural system. When it comes to social finance instruments, we refer to either donation-based or investment-based. So there are 2 types of social financial instruments. You either have donation-based or you have investment-based. From an Islamic financial perspective, you have waqf, zakat and takaful, which we have discussed. What is the opportunity for Islamic Fintech? And in brief, this is one of the greatest opportunities that face the Muslim Ummah and the Muslim population in terms of Islamic Fintech and the digitization of Islamic finance in the new world. 26% of the world's population will be Muslim by the year 2030. And if you look at the African continent, on our own continent, over 50% of the continent is Muslim. Close to 540 million citizens of the African Union call themselves Muslim. So this is the opportunity that we face in terms of how we can transform Islamic finance as being a concept and democratize it to the masses in Africa and globally. One of the fundamental points when it comes to Islamic Fintech is in terms of ensuring that the Fintech itself as a technology provider is also Sharia compliant. And what I mean by this is whether you are a payment gateway, whether you are an aggregator, whether you are simply a technology provider, the underlying terms and conditions that forms the basis of your agreement being a solution provider to the purchaser of that solution has to be Sharia compliant. So it does not only refer to the fact that there should not be any interest in the agreement. Unfortunately, there is a misconception that if there is no interest stated on an agreement, then the agreement is Sharia compliant. That is totally incorrect and false, because Islamic finance goes beyond that. What happens in the instance that there is gharar-e-fahish? In other words, that there is such obscurity that leads to dispute. If there is such complexity that leads to a dispute in a contract. Or for example, what happens in the instance that there was misrepresentation of facts in an agreement? Then in that instance, the agreement can be cancelled from a Sharia perspective. So there are various other elements that go into reviewing the terms and conditions of any agreement to ensure that it is Sharia compliant. Now, I would like to take you through this diagram in terms of the different types of fintechs that are available. So as you can see, you have financing, and under financing you could either have crowdfunding and you can have credit and factoring. So credit and factoring refers to your micro loans. For example, let's say there's an SME that funds, that provides credit, let's say, to another client. So let's say, for example, you are an SME, you sell certain goods to a store, for example, and you would receive your payment after 90 days. Now, is there a Sharia compliant solution to factor that invoice? So factoring and invoice discounting refers to a concept where the invoice is sold to a financier at a discount. So for example, let's say you invoice $10,000 to a store. Now you need working capital to finance the provision of raw materials, etc. for your company. So you would take your invoice, sell it to a factoring company where they will factor the invoice, which means they will give you, let's say, $9,500, right? And the $500 is their profit which they receive after 90 days. So this is what is factoring and invoice discounting. There's a slight technical difference between the two, but basically this is credit and factoring. And under crowdfunding, you have the different forms of crowdfunding. So donation-based crowdfunding, reward-based crowdfunding, crowd investing, and crowd lending. So crowd investing refers to equity forms of crowd investing. Crowd lending refers to debt-based forms of crowdfunding. Then you look at asset management. So on the asset management side, you have social trading, robo-advice, which through an app, for example, you can provide investments to the Muslim community. Now, let's take a simple example of what is called fractional share investment. So let's say a share is worth $100. Now, imagine if you could provide a solution where someone, an average person on the street, only has $5 to invest. How do they access the share market? Can they access the share market in the current system? Most probably not, because $5 is not sufficient to make an investment on the stock exchange. If you approach a broker, the broker will say, I need a minimum, let's say $1,000 before I can open an account for you. But imagine through an app, through fintech, through a robo-bot, through a robo-advisory system, you can invest $1, which is 1/100th of a stock that is worth $100. Now that is revolutionary in the sense that you are democratizing investment to the average Joe Soap on the street. Personal financial management, or PFM. So for example, you can go online onto a personal wealth management platform. You can see on a real-time basis what your platform is doing. So just the other day, I received a particular payment onto an app, and I could see the fluctuation in terms of the price movement. So I could see the price action in real time on my investment. So in the normal sense, you would make an investment on a monthly basis, you would receive an investment report. Now, with personal wealth management being digitized, on a daily basis, you can see what your stock has done or your portfolio is doing. And lastly is investment and banking. So investment and banking could be placed onto a digital platform. Now let's look at payments. So payments has been revolutionized through alternative payment methods. Perhaps one of the earliest examples is what is referred to as e-money transfer system. So the e-money transfer system was first started by Western Union, where the first e-money transaction took place in the early 1900s. A person goes to a Western Union store, you deposit cash, and another person sitting in Japan, for example, could receive the funds. So that is what is referred to as e-money. Another form is referred to as fiduciary money. So physical money does not have to be transported from A to B. It could be a transfer over the internet. And one example of this is cryptocurrencies. So cryptocurrency is a structured method that is backed by the technology of blockchain and crypto to transfer utility of currency from party A to party B. So an example of this is Bitcoin. Bitcoin was established by a person by the name of Satoshi Nakamoto, in which he believed that through a peerless P2P lending system, one could transfer money digitally based on a blockchain which has a public ledger. In other words, that the transaction from party A to party B is verified by an entire autonomous group. So in other words, in that way, that rules out fraud, that rules out a number of other possibilities. And we know in the cash management system of a financial institution, there is always a deficit. If you have deposits that are made to the bank, there would always be a deficit. But when you look at Bitcoin, cryptocurrency, it is backed by the blockchain. So there can't be a deficit because it is a digital form of currency. Now, the big benefit of cryptocurrency and the blockchain is, if you make a payment here from Kenya of United States dollars to someone in the UK, how long would that payment typically take? Anyone? I see many bankers here, so probably many of you would know. 5 days, 3 days, 7 days. Right. It takes a few days for a simple US dollar transaction to move from Kenya to UK. But if I make a Bitcoin transfer from my wallet to your wallet, you receive the money instantaneously. And you can cash that money out within seconds. So that is the power of the blockchain, of cryptocurrency, in terms of providing seamless utility and service to the end users and clients. And then obviously you have other forms of fintech in terms of payment solutions. You also have technology, IT infrastructure, search engines and comparison sites that provide services in the fintech space. So these are some opportunities in terms of the broad architecture of fintech. What are some Sharia guidelines regarding Islamic finance? So firstly, all of the transactions should comply with Sharia law. There is a prohibition of interest, prohibition of speculation or gambling, the avoidance of risky transactions, which refers to gharar, the prohibition of investment into unlawful goods and services, which refer to sin activities, and there should be a sharing of risk between the parties. So this is a market map of Islamic fintech, and as you can see, there are a number of providers in different segments of the market. So if you look at banking, you have banking, IT, internet-first banks, insurance, investment platforms, payments, cryptocurrencies, crowdfunding, zakat platforms, and as you can see, this is a fact sheet in terms of Islamic fintechs that have received funding from venture capital and private equity firms. So Islamic fintech will only grow in time. And just today, I received an article that Franklin Templeton, one of the world's largest investment firms, introduced an Islamic technology fund, which obviously means that you don't introduce the $1 billion tech fund, Islamic tech fund, without knowing that there's a real need for that. So Islamic banking will need to innovate in order to grow and move from a purely banking construct to a construct that is infused with digitization and digitization of assets also. So in terms of GIFS, how can we assist? First is in terms of technical support services, where if you are a fintech, for example, and you want to develop a Sharia compliant solution, we are able to put together a holistic solution in terms of developing that. Now, it's not only about being Sharia compliant, it's also about ensuring that the technology is compliant, the legal construct, the tax construct is also Sharia compliant. Secondly is in terms of global networking. GIFS has close to 14 satellite offices around the world and 3 major offices, one in South Africa. Our headquarters are based in Dubai, and we have an office in Turkey. And we have, as I mentioned, 14 satellite offices in different countries around the world. Thirdly is in terms of funding. We also assist with funding fintech companies. Fourth is that we have our own fintech hub that we have just recently launched in South Africa, and we intend to incubate close to 50 Islamic fintech companies on an annual basis. Obviously, Islamic compliance. We also identify global partners. And I think perhaps one of the most important aspects of any startup, and especially an Islamic fintech company, is to have a backing by a company that has a global track record. So having the brand of GIFS behind your firm, being a strategic partner, holds great weight for any company. In terms of our tech initiatives, I would like to announce to you today that we have officially partnered with 3 cryptocurrency platforms to provide Islamic cryptocurrency services to the Muslim world. The first crypto platform is based in Bahrain. It is regulated by the Bahrain Stock Exchange. The company has a market capitalization of over $200 million. The second company is based in South Africa. It is a crypto arbitrage platform. And the third company is based in Dubai in the United Arab Emirates, in which it is backed by a blockchain, a unique blockchain technology that it has developed itself. So this is in terms of cryptocurrency and blockchain. Other initiatives include a partnership that we have with a major software technology company in terms of AI, machine learning services, artificial intelligence and machine learning, where we intend to launch a hedge fund that is based on AI, machine learning, and also a hedge fund that is backed by cryptocurrencies. So this will be, inshallah, the first ever Sharia compliant crypto fund that essentially works on an algorithm to produce Sharia compliant dividends and returns. So I won't go into too much detail around Islamic social finance because we have done a lot of this previously. But basically the key concept regarding Islamic social finance is in terms of Islamic microfinance, which could be offered to small to medium enterprises. And here, for example, in the Kenyan market, there is a huge opportunity to finance SMEs on a Sharia compliant basis. So this is an Islamic social finance global humanitarian action plan. So if we really want to make a difference in the lives of people, how do we do that using finance? And how do we evaluate our action in the financial markets in terms of delivering real socio-economic value? So this is a pinpoint plan in terms of how these different concepts like takaful, qard hasana, interest-free loan, etc., can assist the poor and the underprivileged in terms of poverty alleviation. So as you can see, you have zakat funds, you have a waqf, which is an Islamic endowment, you have waqf properties, and that intertwined with sukuk, which are Islamic bonds that could be issued, so investors can invest into a waqf-based sukuk. So let's say there's an Islamic endowment of, let's say, $100 million. The community invests into it as opposed to simply donating. Now, let's look at the difference. If you donate $100 million in the community, that money is gone. There is no value creation in terms of understanding what the money was used for, and there's no sustainability of the capital. Half of the capital could have evaporated. There is no productivity of the capital. Now, in finance, we learn of a concept called productive capital. Productive and non-productive capital. So if we want to develop the concept of productive capital in terms of our donations, in terms of our endowments, we need to look at these type of solutions and structures. So for example, you could take $100 million, invest it into a waqf sukuk. So which means that the funds could be used for a project. It could develop a return. The return could be invested into other projects, but the principal and the capital still remains. So as opposed to the capital evaporating over a period of time, in this instance here, let's say you have waqf properties. Now, the property could grow in capital appreciation, and the dividends of the properties could be used to support the poor and the underprivileged. So the point I want to make here is we need viable, sustainable, Sharia compliant structures to back our donations, our sadaqah, our zakat as a Muslim community. For far too long, the community has donated, but we haven't seen sustainability of those donations. So we need to track those donations to ensure that what we are doing is productive in the society. So the question is, why Islamic Fintech? So these are a number of benefits in terms of Islamic social Fintech. This is an example of an impact-based sukuk. So how sukuk and Islamic bond can assist. So as you can see that there is a partnership where you have an enterprise as a non-profit organization. You have the government that also has a contract with the musharaka or the partnership. Investors invest and the funds are utilized for a targeted social project. So let's say, for example, the government of Kenya intends to provide 1,000 homes for the poor, for example. So the government can have a partnership with a sukuk vehicle. Investors can invest and the government can provide funding via that sukuk vehicle to provide returns to the investors. So this is an example of, in general, fintech in Africa. So you look at, for example, the Kenyan market. You have M-Pesa, Kiva, Simba Pay, Abacus, Farm Drive, etc. So why can't we create the next Islamic M-Pesa? So I leave you with that question. Why can't we create the next Islamic M-Pesa? This is an example of an Islamic blockchain. So as you can see that a transaction is conducted on a P2P network. It is validated, the nodes are created, and once that transaction is validated, then a new block is created. So that is why it is referred to as the blockchain. It is not an actual chain, but it is a chain of digital blocks that seek to verify and validate the process of a peer-to-peer technology solution. So what are the benefits of cryptocurrency? Number one, it has no intrinsic value. It is simply a software system. It has no physical form. Its supply is not determined by a central bank. So money that is defined by the supply of the government is termed as fiat money. In other words, fiat is government. So fiat money means it is backed by the central bank. So when we talk of money, we're not necessarily talking only of money that is backed by the state. You could have other forms of money that serve the utility as being a medium of exchange. If I want to buy this mic, for example, what do I need to use in order to purchase this mic? I am not forced to only use Kenyan shillings or US dollars. I could use commodity money. I could use fiduciary money. So why can't I use cryptocurrency as a different form of digital money to facilitate that utility and a medium of exchange to purchase the mic? That is the question. So a quick background of money and the Sharia view of money and cryptocurrency. So coins were used in 600 BC by King Alyattes of Lydia in present-day Turkey. Barter, which was the exchange of goods, was in 9000 BC. And in 118 BC, China used banknotes. In the early 1950s, Western Union used electronic money. There are essentially three views of scholars regarding cryptocurrency. The first view is that it is haram, it is impermissible. The second view is that it can be an asset of value, but it is not a medium of exchange. And the third view is that cryptocurrency can be a medium of exchange and an asset of value. When we talk of currency in Islam, there are two important points. One is istilah and the other is taqawwum. In other words, that if an asset of value has common usage, right, and it is widely accepted by the masses, then we can consider that to be a valid form of currency also in Islam. This is the view of Imam Muhammad rahimahullah, and it is the rajih and the preferred view in the Hanafi school of thought in terms of what defines thamaniya or something being a thaman and a medium of exchange. So if you look at one example of cryptocurrency, we look at the example of the Bitcoin. Bitcoin has gained widespread acceptance where it is used by PayPal, Tesla. The other day I heard about a motor car dealership in Dubai in which the salesman stated to the purchaser that, would you like to pay in cash? Would you like to pay by credit? Or would you like to pay by crypto? So crypto has become another option in terms of payment which has been globally recognized and accepted. So the next important point is in terms of Islamic wealth tech. So with $30 trillion from the great wealth transfer, millennials can save the planet, right, just in time for brunch. This is a statement, but wealth transfer of $30 trillion is expected to take place from the current generation to millennials. And that presents a huge opportunity in terms of digital platforms that could be used for investments via tech platforms like robo-advisors, robo-bots, etc. If you look at Islamic social fintech in Africa, 50% don't have access to branch networks. It is the youngest population globally, and there is a huge rise of the middle class in Africa. Some of the top investors in venture capital in Africa include Barclays, the Bill and Melinda Gates Foundation, and the MasterCard Foundation. I would like to terminate with the last discussion on Sukuk and Islamic bonds. So Sukuk is an Arabic word which is a plural of the word sak, which refers to a certificated instrument. So Sukuk refers to Sharia compliant certificated instruments. It is loosely translated as an Islamic bond. And according to the Islamic Financial Services Board, it represents certificates that represents the holder's proportionate right to ownership in an undivided part of the underlying asset, where the holder assumes all rights and obligations to an asset. Now, these are some of the major differences between Sukuk and conventional debt instruments. So as you can see, Sukuk represents an underlying ownership of the asset, whereas in conventional debt instrument, a bond simply represents a debt obligation. It is simply an IOU instrument. The maturity of Sukuk corresponds to the term of the underlying project or activity, whereas in a conventional debt instrument, the core relationship is simply a loan. The Sukuk prospectus is Sharia compliant, whereas in a conventional debt instrument, it does not contain any Sharia constraints. The underlying aspect has to be Sharia compliant, whereas in a conventional debt instrument, it is not necessarily reviewed for Sharia compliance. The Sukuk manager has to ensure the underlying activities are compliant, and the Sukuk holders have the rights to profits but also bear losses. And also another point that is not mentioned here is that when it comes to credit pricing in a conventional debt instrument is based on credit, is based on a loan obligation. But when it comes to Sukuk, the credit pricing is based on the underlying asset, considering the fact that Sukuk is based on ownership of an actual asset rather than being asset linked. So this is where we come to the differentiation. Sukuk is asset backed and not asset linked. So there's a difference between the two. Lastly, this is an example of a musharaka sukuk. So as you can see, there is an issuer SPV vehicle that issues securities and instruments. The originator, as a partner, provides capital. So let's say, for example, if you're looking at a property development, the originator provides the land, and the investors will invest into the sukuk. They would receive their profits, and at the end of the term, the originator, as the obligor, will provide a purchase undertaking to purchase the project at, let's say, after 5 years or 7-year term. So this is in brief what a sukuk looks like. And there are many examples of contemporary sukuk. For example, the Dubai government, through the Nakhil Corporation, issued a sukuk for property developments. So that is one example of a contemporary example of sukuk. The next important point is with regards to takaful or Islamic indemnification. So the major differences between takaful and conventional insurance include the fact that in conventional insurance, it is simply you are making a premium payment to transfer risk from yourself as the policy holder to the insurance company. So in Sharia, you can't pay for the transfer of a risk. When it comes to a takaful company, it is based on iltizam al-tabarru, or a donation that is provided as a contribution to a takaful fund. The takaful fund invests into Sharia compliant assets and pays out claims according to the structure of the takaful financial structure. When it comes to insurance, then it is referred to as premiums and not contributions or donations. And the premiums are used now for reinsurance, and the premiums could be invested into non-compliant assets also. Lastly, just a quick snapshot of Sharia governance. So as you can see, Sharia governance is the overarching principle in any Islamic financial institution. At the top level, executive level, you have the Sharia committee or Sharia board that reports to the board. And right at the bottom, you have different functions. For example, you have a risk management function, Sharia research function, Sharia audit function, etc. So there are different functions at an operational level that need to be in sync with the Sharia committee, which refers to a Sharia board of ethics that ensures the underlying financial transactions within a financial institution are indeed Sharia compliant. So lastly, I would like to terminate this first part of this session by saying, again, what we do today will determine the success of the Islamic finance industry in the future. The sustainability of this industry is indeed our responsibility.